Hey folks, welcome to another product review at Finominal. Today we're going to have a look at Goldman Sachs ActiveBeta Large Cap Equity ETF, which has the ticker GSLC. It is, I think, the largest multi-factor ETF trading in the US, has around 11 billion of assets under management, and is dirt cheap with 9 basis points. So let's see what the right benchmark for this product is and kind of like how it has performed. We're going to use the performance benchmarker for that. So what we do see is the suggested benchmark is the S&P 100. We do see Y, effectively because the R square is 0.99, which means that the product which has large cap in its name indeed is a large cap product, where the correct benchmark is the S&P 500. We also see that the performance since inception in 2016 was slightly lower than the S&P 500 index. So let's find out why. And for that, we will go to know your factors to simply see if this product does something differentiated, if it has factor exposures. And as a first step, we're going to look at a kind of like holdings-based factor exposure analysis. So here we see the rank of GSLC versus the S&P 500 on a bunch of metrics. And this is like value metrics like ETFs, but also dividend yield, growth, and so on. We do see the portfolio of GSLC ranked versus the S&P 500, and 100 means it has positive exposure, lower means negative. What you can see, it ranks pretty much flat. The S&P 500 represents the dotted line here on all of them, which would indicate that GSLC does not have strong factor exposures. Now, we can confirm that by looking at the results from a regression analysis, where we see that, yes, historically there was some factor exposures, but the magnitude of that is pretty low. And more interesting is that if you look at the fact sheet of GSLC, it states that the portfolio is comprised of stocks that are high in value, high in momentum, high in quality, and high in low vol. So classic multi-factor product. Having said that, throughout most of its time, the momentum exposure was negative and the value exposure was negative. And that's not great. And as mentioned, the problem with this product is that the factor exposures are just too small, too insignificant. And there's another way of highlighting that is by looking at the overlap from a holdings perspective between GSLC and the S&P 500. We're going to take SPY as a proxy. So I'm on the so-called securities analyzer. Now I'm going to fund overlap analysis. And effectively what we see over here is the number of holdings in GSLC is 448. So very close to the S&P 500, which has more than 500 stocks, ironically, because of A and B shares and so on. But there is a huge overlap of 405 stocks. And you can see that it expressed in percentage as well. So there's a 76% overlap with S&P 500. And if you're not different as a fund, it's very difficult to generate outperformance. So let's see if you can find something more interesting. So we're going to go to the Fund Explorer. Going to go to, let's only look at ETFs because GSLC is an ETF, Smart Beta Multi-Factor, and see what we can see in terms of other similar products. So let's go for the first one. It's the largest one with about almost 5 billion of AUM, which is Invesco's Russell 1000 Dynamic Multi-Factor ETF, OMFL. So let's see if that product is more interesting. We're going to go back to the securities analyzer and simply compare GSLC versus OMFL. Did I get that right? I did. Too many tickers. And yes, from a performance perspective, indeed we see that OMFL, the blue line, has outperformed GSLC, and GSLC is like the S&P 500, right? It's an index hugger, effectively. We do see also that from a fee perspective, Invesco's product is more expensive at 29 basis points versus 9, but there is no problem paying high fees for better performance. So just out of interest, let's find out why OMFL is different than GSLC. We can do a quick factor exposure analysis over here. And this highlights effectively what we saw previously, that GSLC is basically a beta proxy for the S&P 500. It has very little equity factors, and especially compared to OMFL. And just to kind of like finish it off, like OMFL, let's have a quick look at that on the Know Your Factors tool, just to see if the exposure is more pronounced to like the standard equity factors like value, momentum, and so on. And indeed, we see that to a degree. You can see those bulks are a little bit higher than previously. So they have a small cap exposure. And from a regression perspective, OMFL has much larger magnitude in terms of exposures. Now, if this fund has positive or negative factor exposures, that is for the fund manager or the index to be decided. But as mentioned, it is worth having significant factor exposures, because if they're too low, then there is no chance of producing outperformance. So to summarize, Goldman Sachs multi-factor ETF is cheap, which we like. 9 basis points makes it probably like the lowest or one of the lowest multi-factor products. But unfortunately, it also comes with very little probability of generating outperformance, simply because the factor exposures are too low. That's it. I hope you learned something. Have a nice day.